working as a busy schedule.
All right, I'll share my screen here as we get started.
Okay. All right. So thanks for everyone being here. Just a little housekeeping. Whenever we get started, make sure you mute unless you want to ask a question. And then also, we want to just have John's picture on there as well. So just mute and take down your visual. So let's kick it off here. We have John with Acrisure. He's our guest speaker today. And KCA's safety committee thanks him for being on this lunch and learn that is going to discuss the role of your insurance broker on risk management. And also, I want to mention that John is part of our safety committee as well. And so we appreciate him doing dual duty here today. And without further ado, John, will you take over?
Sure thing. Thanks, Seth. I appreciate that introduction. Can everyone see the screen okay? The slides here? You can see this okay? Perfect.
Yep.
Okay. So as John said, or Seth said, I'm a client advisor here at Acrisure. I've been a member of KCA since 2024, so relatively new member, and more recently than that, member of the safety committee as well. So really appreciate the opportunity to speak to you all. It's just great to kind of have this opportunity to interact. So Acrisure, if anyone isn't familiar, which I'm sure some of you are, because anyone that's a Steelers fan, right, they know that the Steelers play at Acrisure Stadium, or I mean, in the hearts and mind of most Steelers fans, it always will be Heinz Field, which I'm sympathetic to. I get that for sure. But Acrisure, among many things, it's a big company, but it's a risk management and insurance brokerage firm. So that's at least the side of the house that I sit on. That being said, I know that nobody really wants to talk about insurance more than they necessarily have to, want to keep it at a minimum. So I certainly understand that. The good news is that I'm not going to be talking about insurance very much at all today. I'm going to talk about something that I think we all have a more vested interest in, which is, protecting our organizations from risk and taking on risk that, we really don't want to assume. So as I go through this, my goal is, truthfully, I don't think I'm going to say anything that's going to be earth-shattering. I don't know how much new material I'm going to bring to the table. A lot of what I'm going to talk about, you may already do already, or you may have kind of been thinking about it before, but you may not necessarily have thought about your insurance broker as a resource in this way. So hopefully, I just say a couple of things that maybe you can kind of turn around and bring it to your insurance broker or have an internal conversation as far as, hey, maybe we can lean on our broker for this where we weren't really aware that we could before. So the other thing I'll say, I'm not a lecturer. I don't like to lecture. I don't like to be lectured to. So I hope that we can kind of keep this as interactive as possible. If you have questions or comments or concerns, there's certainly going to be time for us to talk in a little more detail at the end of the slides here. But I encourage you all throughout to go ahead and raise your hand, and I'm happy to digress in any way throughout this. And if I say anything, that maybe your broker's already helping you with this and you kind of feel comfortable sharing with the group how your broker might be helping you or what they might be doing or what that looks like, I think it would be helpful for all of us to hear that. So I encourage you to please go ahead and share that as well. Okay. To start with, let's get this going here. To start with, I just want to give a little bit of background. I'm having some technical difficulties. There we go. Nope. There we go. Sorry about that. But to start with, I just want to give a little bit of background on kind of how the role of an insurance broker has evolved over time. So I would say 10 to 15 years ago and beyond, the broker was a very transactional figure in a sense that their job was really to try to find the best deal on price year over year and hopefully save money, right, in the process of doing that. But doing those things under the condition, of course, that coverage wouldn't be sacrificed because nobody could afford to have claims that are uncovered, right? And those elements are still a big part of what an insurance broker does today. But we've kind of seen over the last 5 to 10 years or so a little bit of a shift where brokers have started to kind of ask themselves, all right, what are some additional resources that we can provide to our clients to maybe help them solve for some things that are outside the traditional scope of insurance? So a lot of resources put into safety, risk management, claims management, other things like employee benefits, right? Cyber, payroll, all that kind of stuff. But to what extent are clients aware that these resources are available from their broker? I would say it's disproportionate to a certain extent. So we'll talk more about some of these today. And when it comes to risk management, I mean, I think we're all aware that's far and wide. There's a lot of topics to discuss, but I don't want to get into everything today. I'd rather keep it a little more concise. There's three areas I want to talk about: safety risk, operational risk, and financial risk. And these areas are largely correlated. We understand that. They're interwoven to a certain extent. Certainly, a safety event is going to have an impact on financial risk. An operational risk event is going to have an impact on a company's finances as well. But I'm going to try to break this out, break each area out, and explain it and talk about it separately, and then give you some sample questions to maybe take and bring to your broker and try to kickstart that conversation as to how they can help you in some of these areas. All sound good? Any questions so far? Okay. So first, I want to start with safety risk. And when I think about safety risk, there's really two key categories that I'm thinking of. One is how do we protect our employees? Two, how do we protect our assets? Assets being, equipment, vehicle fleet, property, etc. And there's really a few key areas to safety. First and foremost, you have to evaluate the risks that exist in order to identify like potential risk areas, contributing factors that could lead to a claim or some sort of safety event. And then based on that identification, you can implement protocol and preventative measures to mitigate that risk. And preparedness is obviously a big part of it as well, because I don't want to say when the inevitable happens, I don't want to say that, but in the event that there is some sort of safety event, it's important to kind of have the next steps mapped out so that you can minimize the severity there. So preparedness is a big part of it. But I have safety culture on there. I have it in bold. Safety culture to me is the most important key to safety within an organization. And honestly, I hear that term thrown around a lot nowadays. It's definitely a buzzword. It's kind of almost crossing over to become a little bit of a cliche. But the reality is, and I think this is true with anything in life, right? When you need to have genuine, authentic buy-in from everybody in the organization in order to really make an impact on safety, right? And we'll talk more about safety in a couple or safety culture in a couple of slides, but it doesn't really matter all the resources that you could pour into safety. If you don't have that safety culture, that genuine buy-in, you're only going to be able to be so successful as far as sustainable safety performance. Makes sense? So, as far as resources along those lines, right? So, in terms of risk identification, risk assessments are key for that. And I'm sure many of you are already doing risk assessments, and you probably have people on your own staff internally that can conduct those assessments for you, and that's great. And I'm not suggesting that those people aren't qualified to do that sort of thing, because I'm sure that they are. But I think, there's an additional value that's brought when you have someone coming in from outside the organization to take a look around. They can really give an objective look at things and maybe point out some risk factors that otherwise would go unnoticed to a certain extent. And your broker, I think, typically is someone that's qualified to do this kind of thing because, I mean, they have some expertise and some familiarity, at least, in your business, in your organization, the type of work that you do, right? And they can provide that objective look around that maybe you're looking for. Written safety manuals are a big part of it as well. I'm not going to say that a single document is going to be the end all be all when it comes to safety, but it certainly serves its purpose. It can really help to just formalize safety programs internally. But safety trainings and toolbox talks, those two kind of go hand in hand. The safety trainings, I think, are super important, not just because it's important to obviously train people to do their job safely, but also it just can't be understated the impact that safety trainings have on safety culture, right? Because it's an opportunity to get everybody in the same room, get some common messaging going, and it's really an opportunity to get that buy-in from everybody in the organization. So it's important to have those safety trainings being interactive, interesting, engaging, all those sort of things to really foster that buy-in that we're talking about. So, safety culture, the way that I define it, maybe there's a few different definitions that are out there, but shared approach to safety within an organization. Look, there's a very human element to it where we want the people that we work with to be safe at work, right? We want them to go home in the same condition that they showed up for the day. That's the human element of things. But there's also a secondary benefit, I would say, where we understand the impact that safety and safety culture have on morale, on workmanship, and on reputation. So, like, for a combination of those reasons, I think that safety is a focus for all of us. Kind of goes without saying. So just to kind of give you some sample questions to ask your broker. So, ask them for resources that are available as far as identifying risk, right? Ask them about Pennsylvania's workers' compensation safety credit. So I'll just let you in on a secret, and some of you may already have this or know about this. In Pennsylvania, if you assemble an internal safety committee that meets once a month and discusses like claims, open claims, and risk management and safety, those types of things, you can submit for approval, and once you get approved, you get a 5% discount on your workers' compensation premium. So certainly your broker can help you get set up with that. And then as far as safety trainings, just ask for help making sure that those are as effective, interactive, engaging as possible, understanding their impact on safety culture. So that kind of wraps up my points on safety. Does anyone have anything that they want to add? All right. So let's discuss operational risk. If you were to look up operational risk on Google, it really paints a really broad definition, pretty much just any risk that's associated with operating your business. To me, I like to kind of drill it down a little bit and just to get a little more specific. When I think about operational risk, I'm not going to say that it's um, unseen risk necessarily, but it may not be as tight as top of mind as, safety risk or financial risk maybe, right? So it might be just a little bit below the surface, a little bit more in the weeds. And really what I'm referring to are just three key areas: contractual risk, which is mainly any liability that you assume out of entering a contract with another party. Specifically, I'm kind of looking at when you enter a contract and certain things are being required of you from an upstream party, any liability that may be or any risk exposure that you may take on unduly out of doing that. And then kind of similar is vicarious risk, which is kind of like the adverse, where you as the upstream party are taking on liability for work that's being performed on your behalf. So anyone that's working with subcontractors, there is your vicarious risk exposure. And then claims exposure as well. So when a claim happens, whether it ultimately is intended to be covered under a policy or not, there's certainly a risk that's involved there, and we'll talk more about that in a couple of slides here. So as far as contractual risk and combating contractual risk, contract review is key. And there's really two resources that are available. You have your attorney, which your attorney can comment on contract language and legal wording and that sort of thing, where a broker really can't or has to be careful along those lines. And then you can lean on your insurance broker as well for review of the insurance requirements or whatever is being required of you by that upstream party. So when you're having that conversation with your broker, and I always recommend any contract that you're entering into, it's important to have them look over the insurance requirements. The question really becomes is, hey, what we're being required to carry, do we have it already? Is it practical? Or if we have to add it, how is it going to affect our cost? Those are the questions that you should really be asking as far as that area. And then in terms of vicarious risk, right? So the worst case scenario that we always want to avoid, right? And we've seen this play out, unfortunately. And maybe honestly, some of you have been a party to these types of situations. If you feel comfortable sharing, I'd ask you to go ahead and do it and do so. But you as the upstream party hire a subcontractor, a claim arises out of the work that they're performing on your behalf. And where their insurance should be responding, for whatever reason it doesn't, and that claim gets tendered upstream to you as the upstream contractor. I mean, that's worst case scenario. Those situations, they get pretty ugly. It's not a fun space to be in, that's for sure. And it's avoidable because you can have certain requirements in place of those subcontractors to minimize the chances of that type of situation playing out. So regardless of subcontractor, the type of work that they do, the type of project, there's a few standard items that should be required of every sub. And I'm not going to get into all the specifics. I'll save you the boredom there. But essentially, you can develop a checklist that regardless, this is being required. And then it all comes down to collecting certificates of insurance that mirror what you are requiring these subcontractors to carry. Now, like collecting certificates and doing a review and making sure that they're up to snuff and they're what they should be, that's an extremely burdensome clerical lift. It's really difficult to do and stay on top of. I recommend offloading that to your insurance broker. Not only because they have like software and the capacity that can assist with tracking and all that, they have the expertise where they can look at a cert and say, hey, something looks wrong here, something doesn't quite match your requirement here, and you can kind of have a conversation from there about that. Does everything make sense so far? Yeah. And then finally, just talking a little bit about claims. So again, kind of similar to what we were just talking about, I always cringe a little bit when I hear companies talk about, yeah, they handle their own claims reporting on their own. And the reason why is just because, again, not to say that they don't have people that are capable of handling that and being involved in that process, but I've seen situations play out before, unfortunately, where a company will report a claim and try to go through that process all in good faith, but somewhere along the way, things go astray a little bit, and ultimately it ends up affecting the result of the claim, whether a claim is covered by the insurance company or not, or it affects the payout value of the claim as well. So it's really important. I would strongly recommend getting your broker involved early in the process if they're not already, to make sure that that claim is submitted accurately in a timely fashion, oversee the claims process and provide updates as needed, and also advocate on your behalf as well. I'm not here to suggest that your broker could or should report a claim in a way that's maybe facetious and may give you an undue advantage throughout that process, but certainly there's a way to go about it that gives you a fair shake all throughout. So, just kind of to summarize this operational risk portion of it, in terms of what to ask of your broker, ask them to begin reviewing your contracts before you sign them, and ask them to send you or put together a checklist of what you should be requiring of each of your subcontractors, and then ask them to help you with monitoring and tracking certificates of insurance to make sure those requirements are being complied with. And then if you don't have this already, I would work with them to develop a formalized claims process to make sure claims are submitted accurately and on time, and they're on top of it every step of the way. Okay? I've done a lot of talking to this point. Does anyone have any questions they want to ask or anything like that?
John, just a question, just regarding the subcontractor review. We typically, well, first of all, I work with Alexander Building Construction. We're in Harrisburg,
Okay.
and our parent company is Butts Family Companies over in Allentown.
Sure. Sure.
And so our broker is a Graham company out of Philly, and we work a lot with those guys. Obviously, Jeff Spatz and some of those other guys, but as far as this topic of subcontractors, we have a pre-qual form where we're asking for their EMR, their, injury history, OSHA history, of course, certificates of insurance. And I feel like we have a pretty good handle on it. But is there anything else that I know you didn't want to get into the weeds, but is there anything, maybe some low-hanging fruit that we still need to consider and look at from these kind of subs?
Yeah, it sounds like you guys are doing a great job. When it comes to certificates of insurance, just being super granular on what is actually being required as far as certain wording, like additional insured wording, primary non-contributory wording, blanket waiver of subrogation. You just want to make sure that those things are existing on the certificate in addition to the insurance limits that they're providing you,
Yep.
right? And I've also seen, and I'll just be honest, I think this is a little bit extreme, but I've also seen before a job or as part of the bid process, a GC or any upstream contractor that's hiring out a sub will ask for 5 years of currently valued loss runs in addition. And all that that does is it just kind of gives some specific detail as far as certain claims that have occurred, what those amounts have actually came out to be. And it can just be helpful context. Um, so those are my recommendations, just making sure really that you have all the proper wording in place on these certificates. And then if you felt like it was appropriate, you could maybe take a look at some loss runs, although that is rather extreme. You may not feel that's warranted.
So you mentioned earlier too, it is a cumbersome program to, it's a heavy lift. I think you mentioned, and I mean, it's probably like anyone. We try to collect these. We probably have some gaps from different subs.
Yeah.
Even if we get them in house, who's really reviewing them? Just all those kind of things. Do you guys typically? I think you mentioned this. Does Accusure actually sort of do that service for your clients?
We
Okay.
do, and in some instances we track it more manually ourselves. In other instances, we partner with a third party software that
Mm-hmm.
kind of handles that tracking for us. So like gathering certificates, reviewing for compliance, it kind of helps us along with that. But yeah, that's
Yeah.
we definitely handle that. Yeah,
Okay. Good to know.
sure.
Thank you.
Yeah, of course. Any other questions so far? All right. Let me move on to financial risk. And I mean, financial risk, talk about a broad topic. There's a lot of financial risks that exist out there. I couldn't even begin to really dive into detail on all of them, but there's two that I just want to touch on as it relates to insurance, right? Claims being one of them, and exposures being payroll, revenue, and subcontractor costs. And when I talk about exposures, what I'm really referring to are big audits. That's the resulting issue. Some of you may have dealt with big audits in the past. This time of year, it tends to be audit season, so maybe you guys are going through some audits as we speak right now. But certainly, like that process is not an enjoyable experience, very cumbersome. And a lot of times it results in a big check being cut at the end of the year, which is we never want to see that. The way that you avoid that situation playing out is by adjust tracking exposures throughout the policy period and making adjustments all throughout so that you avoid the insurance company coming back to you and asking for additional premium at the end of the year. And that's certainly something that your insurance broker can do for you, where they monitor those exposures and make adjustments as needed. So if anyone's unfamiliar, and you may be, and I'm sorry to be redundant, but your premium for the year is calculated based on a projection at the start of the policy term. So if you're doing 500,000, if you project 500,000, then you end up doing 1 million in revenue, you can expect a big audit. Whereas your broker, all along the way, they could just be truing up those projections to avoid the insurance company coming back to you at the end. So that's kind of the solution to the audit issue there. The other 2 points here are obviously centered around claims. Before I go on to the next slide, we'll talk a little bit more about workers' compensation mods. But claims, again, whether they're covered or not, and I mean, if they're not, if you have a big claim that's uncovered, that's like worst case scenario, obviously. There's really no telling how severe of a financial impact that could have on an organization. But even for claims that are covered under the policy, this is, rather common knowledge, I think, but whether it's a big claim or whether it's a bunch of smaller claims, maybe you have a little bit of a frequency issue, those type of scenarios will start to impact premiums year over year. So as we go on, we're going to talk about workers' compensation mod now. I don't, you probably, I mean, Darren, you were just talking about it. You deal with this type of stuff. You probably have a good grasp of what a mod is, but for anyone that is not super familiar, it's really just a premium multiplier that's indicative of workers' compensation claims history. So a one is an even mod. If you have a one, it's indicative of average claims history. If you have better than class or best in class or better than average claims history, a 0.75 mod, for example, below a one means you're paying you get a 25% premium credit. But on the flip side of that, if you've had some claims issues and maybe your mod is up to like a 1.25, let's say, it means you're paying 25% more for workers' compensation than you otherwise should be. That's just the very basic way to look at it. But certainly that's impactful. And that's kind of this is where claims and safety really come to a head financially and make an impact on, a company's finances, right? And it's impactful on bottom line premium because obviously you're looking at an increased insurance cost if your mod is going up. And it also affects the ability to bid jobs. I mean, Darren, you can probably speak to this. You may have a threshold or a limit where if a subcontractor, if they have a mod that's over a certain number, you won't allow them to bid a job. I know that's the case for a lot of public work. At least that kind of is the way that it is. So if you've had claims history or claims issues in the last few years, you may get to a point where you're kind of sidelined a little bit, which is not a good place to be, obviously. And then it also affects your price point, especially kind of relating to other competitors of yours, where if their mod is lower than yours, they have an advantage, a little bit of a cost advantage there. So, like I said, it's kind of this is the point where safety and claims have a very real impact financially.
John, do you mind if I ask a question?
Sure, please.
So I'm with Select Physical Therapy, and
Okay.
I feel like working more with the brokers and everything is an initiative we've been doing. We actually work a lot with the Graham Company. But what we do is obviously we're a huge outpatient physical therapy, but what we really shifted to is the injury prevention side of it for on-site services as well.
Great.
And I feel like that's been a more of a conversation that's been relevant and just like really being transparent with understanding what you guys look at as the broker. A lot of times employers that we meet with, they're like, we'd love to have on-site injury prevention where we put like an athletic trainer on site to kind of help offer that first aid injury triage, right?
Yeah.
It's an affordable process because it's not really having OC Health on site. It's kind of that cross between, but we're able to help reduce the recordables significantly and also create that culture of care that you have somebody right here to help you out.
Yeah.
But a lot of times employers ask us about like how they can leverage their brokers and insurance companies to kind of either, one, help reduce premiums or utilize wellness dollars to like prior to implementation to like kind of have the funds initially to get started. Or in your perspective, is it better if like they pay for it outright the first time around and then like after a year we come back and show results of like what we were able to reduce their claims by or anything like that?
Yeah.
Do you ever have those conversations with employers kind of asking for either, the premiums or discounts or wellness dollars to be utilized for initiatives that are going to help try to reduce their recordables?
Definitely, definitely. We have a lot of conversations about how we can kind of invest in certain resources like that for sure.
Okay.
And honestly, I think that when you say like nurse triage or any type of triage service, that's been increasingly common nowadays, whether it's from the broker that's pushing it for our client's own benefit, or it's actually coming from the insurance carriers themselves because they understand that that makes an impact. If they can get out in front of a potential workers' compensation claim, it ultimately can reduce the overall cost of the claim as well. So go ahead,
So
sorry.
it's worth it for employers to like be asking those questions.
Definitely. I
Okay.
definitely would say so. Yeah. Yeah. And we can talk more about that if you'd like to, Ashley. I think
Sure.
yeah, definitely worthwhile for employers to have those types of conversations.
Because I
As
feel like
ear-
even just on Monday, I did a call with an employer and their insurance and their broker was involved. And everybody, it was such like a delightful conversation of like, yeah, like it was all yeses. And that's what the employer is like. I had no idea if which way it was going to go. And I know for us, it's like hit or miss, but it seems like we've been getting a lot more yeses of like this side of like prevention that the brokers and insurance companies are willing to like kind of just discuss how to implement to have a bigger impact then.
Yeah, and I guess the pushback that you would get in certain situations would just be like, we don't want to pay for that type of thing up front. Is that kind of what you see sometimes?
So it's hit or miss, right? It's either
Yeah.
like I feel like the conversation on Monday was we started it at one facility, but the another facility in another state just didn't have the funds to get started. So they were trying to leverage, like, look at how much they reduced our recordables here. We'd like to
Mhm.
implement this, but we don't have the funds right now. Like, so they were asking for either a discount or some type of like
Yeah.
credit or something to like utilize to help fund the program. So they were trying to leverage their own data within their organization. But yeah, that's where it's like, I don't know what's more helpful, like to help employers, right, to get there. Is it to like get there from the beginning or like get them to do it for a year and then come back and have the conversation of like the impact?
Yeah, I think it's I will caveat it's probably case by case to a
Sure.
certain extent, but I mean for me I think the sooner the earlier the better.
Okay.
Definitely. And as far as like investing dollars into that kind of thing, it actually that segues us very nicely to our next topic here. So, companies at a certain point, sometimes they get a little bit tired of playing the traditional insurance game where they feel like they have very little control and maybe they have really good claims history, yet their insurance premium still goes up 10% or more every single year. And at a certain point, they arrive where they're kind of like, hey, we want to look at some alternative things here and some alternative ways to insure our business. Captives are the most popular, I would say, because they tend to be the most effective and most profitable. But there's also deductible programs and dividend plans as well. And I'm sure for like Darren, you may be in a captive already. Some other folks may be in a captive. It tends to be pretty popular amongst the trades.
So, John, just a quick question: is that like the rolling CSIPs, or the owner?
No, it's different. It's
It
different.
is okay.
So, yeah, it's different. And it involves, as you can see here, in workers' compensation, general liability, and auto. And I'm going to explain it a little
I
more on
gotcha.
the next slide here.
Okay.
So really, like, let me just give a little bit of background on kind of how insurance carriers work and how the industry thinks and whatnot. So an insurance carrier will look at a company and they'll say, all right, we'll write their insurance, but we're going to place them in a group with other similar companies. And that way we can project the claims total for the entire group. And based on that projection, we know how much premium we need to charge everyone in that group to pay for the claims and also generate a profit for us on top of it. And when I say us, I'm speaking as the carrier. Generate a profit for the carrier on top of it. So what that means is that if you're in that group and you're not having claims, they're using your premium to pay the claims for everybody else in the group. That's just the reality, right? The captive is different because your premium is based on your own claims history. So companies that decide to move into a captive that have really good claims history over the last few years, they frequently pay less premium in a captive than they would to a regular insurance company as a result of that. Okay, that's like the reduced cost aspect, the upfront cost aspect, kind of the benefit, I should say. But there's also the aspect of profit potential, which anyone that's familiar with the captive, I think that's really what they identify the two with the most. Generally speaking, the way that it works is in a captive, you pay your premium for the year, just like you do now. You have your claims. Whatever premium is left over after claims are paid comes back to you at the close of the underwriting year. So again, those companies that typically have good claims history, they get a big dividend back on their premium each year, which is really nice. And then the third point I just want to touch on is greater claims management and risk control. Not just because the captives offer a lot of resources along those lines, but I think kind of a little bit of human nature at play where, when it affects the amount of money that you get back at the end of the year, you just take a heightened sense of importance towards risk management and safety, claims control, that sort of thing. So just to kind of wrap up on this topic, in order to avoid audit issues, I would work with your broker and ask them to track exposures throughout the year and adjust those policies as needed to avoid a big audit, right? And talk to them about your workers' compensation mod and ask them to explain it to you. If you don't know the number, ask them what it is. Ask them to compare it to your competitors. There's a database out there, I'll just tell you, where you can look up any company in Pennsylvania and see what their mod is. So maybe it's worthwhile. Say, hey, these are the 10 companies that we compete with the most on our bids. Can we see what their mods are just to kind of see where we stand amongst our peers, right? And then lastly, maybe it makes sense to look at a captive or some sort of other alternative risk program. But that pretty much wraps up all the discussion points that I have today. We're going to have some time for some more questions and open discussion if anyone has anything. But before I get to that, I just want to say thanks again for this opportunity. Hopefully, you walked away with one point or two that is worthwhile for you and helpful. If there's any other questions that may come up, this is my contact information. I'm always available. So look forward to staying connected with you guys.
And also, I will get this information out to everybody as well, John.
Perfect.
In the next day or two. I did want to note. I did want to note that several years ago, when OSHA changed the, let me do this. When OSHA changed the silica ruling, several years ago, the insurance broker was really key in helping navigate that ruling from the insurance broker's view. And I remember that was a really helpful um, lunch and learn that we had as well.
Yeah, I mean, we didn't even really touch much on compliance and certain compliance issues, but certainly, the
Yes.
broker very, very a helpful resource in that way as well.
Yeah, I noticed that. So thank you.
Yep.
John, we have a lot of subs who are mom and pops, smaller subs who don't have resources of health and safety staff and expertise and knowledge and whatever for
Yep.
training. And I often push those guys back to, call your insurance broker. They should be able to have the resources of a loss control representative to come out and help you with your written plans, training, all those good things, toolbox stocks, whatever. But I guess as I was thinking of that, do most brokers offer that kind of service, or is it just sort of the bigger ones?
I think most brokers, generally speaking, are expanding their service offerings.
Yeah,
But as far as the brokers that are truly offering the full suite of services, it does tend to be some of those larger firms, uh, generally speaking,
yeah,
I would say.
And John, if I may, and Darren, like you, like you advise your subs, I advise my clients all the time to go to their broker for certain safety materials and even safety audits. I mean, there's all kinds of a wealth of resources they'll provide. And John, my experience has been that even if the broker isn't going to provide it, the underwriter very well might as well, because they have a huge
Yeah.
interest in, the easiest claim to resolve is the one you don't have to have. And so they love sending out folks for inspections, for audits, for safety training, providing written materials, providing model safety handbooks, et cetera. Certainly, you want to go over all of that with your broker and your counsel as well. But those are yeah. And you're right, Darren. I mean, obviously, we drink the same Kool-Aid in terms of how we advise people, because I tell them all the time, go talk to your broker, get the free stuff. You already paid for it, your premium. You might as well get it as well. Get the benefits of that. Got to tell you, John, I love the way you put that one point about restraining in terms of looking at the language as a broker, but heavy emphasis on the coverage amounts. I got to tell you, I do the exact opposite as counsel. I will look at the language of insurance provisions. When it comes to how much money you need in coverage, 1 million, 1.5, 2, I always say go to the broker. My license doesn't cover that. So it's very neat the way that we sort of dovetail on that.
Yep.
And, if you could speak to it, John, I don't know if people are interested or not, but one thing that comes up all the time, you talked about all the different safety measures that a company can implement. Do you ever talk to your clients about how to document those safety measures? I get all the time when I talk to clients and they say, oh yeah, we trained this guy or whatever, he shouldn't have done that, et cetera, or she shouldn't have done that. And I say, oh really? Well, do you have records of the training sessions you had? Do you have the curriculum? Do you have sign-in sheets? Do you have all the toolbox talks? Do you have any evidence of the on-site, maybe ad hoc training that was done, which you can document? And the more you have documentation of that, the better you are when it comes to dealing with both OSHA and perhaps any worker claim as well, both in workers' comp and also just litigation. And by the way, I apologize for the terrible lighting in my office, but it is what it is.
No problem. No. You make a great point as far as documentation there, Michael. I mean, certainly with OSHA compliance, right? Certainly when it comes time, when a claim occurs, right, documentation is very important. But also throughout the underwriting process, it's really important to have formalized safety processes that we as a broker can share with the underwriter to really tell the story that this is a best-in-class company. They're deserving of best-in-class rates. A lot of companies that I work with, they ask questions along those lines. Is there a formal safety program? Is there a formal safety training manual? Is there a fleet maintenance program that's all established in writing? And if the answer is no, we just see a lot of carriers walk away from the table. They're just not willing to partner with a company that doesn't have those sort of resources available. So great point there, and it is all the more reason to make sure that you have formal documentation of things. The other point that you made, Michael, and as I was listening to Darren's question, I realized I had forgot to make a point earlier. You're absolutely right. If you go to your broker or any sub, Darren goes to a broker, and maybe the capability just isn't there. They don't feel comfortable stepping in to assist in any of those safety trainings or risk assessments, anything like that, the carriers have the resources that are available. So it really becomes as simple as turning around and potentially making an introduction to the carrier. Uh, that's what I would say to that. And then one other point, not to just dominate the conversation here today, but Ashley, I meant to just kind of tie it up. As far as captive and that premium dividend, a lot of times what the conversation becomes then is, hey, if we're getting 50, 60% of our premium back in a given year because of good loss performance, how can we reinvest those dollars back into our company to improve safety and improve risk resources? I mean, there's a lot of things you can do with that money, but a lot of companies like to kind of just reinvest it in risk management.
Well, that's what I was going to ask because I feel like I had another conversation a couple weeks ago with an employer, and we were talking about funds for financing the program, and they were like, "We
Mhm.
wonder if we can use our captive money for this, like last year's
Yep.
captive money." Is there restrictions on what an employer can utilize that captive money for, or is it kind of just like you guys give that back and it's up to them, or is it something that you typically try to like roll into next year's your expenses for them next year so then they just pay less on that end or
I mean, we see it all.
okay,
Short answer, there's no restrictions. It's totally up to individual discretion on what they want to use that money for.
cool.
Some companies bank it, some companies just reinvest it right away and put it towards different things, but it's totally on their own discretion. All
John,
right, so when you go
just a
ahead, sorry.
general question. Is there from your perspective that one big issue, concern from, your perspective as a broker that people just need to start addressing from a safety standpoint? Seth, you mentioned silica a couple years ago, but I feel like we all have our written plans, those kind of low-hanging fruit things, Um, training and documentation is obviously important, but is there anything that you're seeing that's, a little different perspective? Maybe that's a question for you too,
Yeah.
Michael.
For me, it's really not one thing. The only thing that I've observed is, a lot of companies they offer safety trainings and they do it on a somewhat regular cadence, which is great. At times, I've just seen a little bit of that interactive component missing. And over time, it kind of just makes those safety trainings a little bit less effective, right? I love to see when there's a company that's super, super set on making those safety trainings as effective and interactive as possible. Those are the ones that are most effective in my
Mhm.
mind. But it's tough to just pin down one thing, like one trend that's out there. Um, I'm sorry, I wish I could give you a little more of a
Yeah,
direct answer, but
that makes sense.
okay.
And Darren, if you want me to jump in, I can. I look at it from a totally different perspective. Most of my safety related work is involves OSHA compliance and defending against citations. When it comes to a particular worker who's injured, that's usually going to be handled by my client's carrier, usually somebody who's upstream from where John is. And they usually will provide their own counsel in that situation. But nonetheless, I sort of will look over the shoulder of that counsel and certainly advise the client, because to the extent the coverage doesn't pick up anything, they could be facing that risk. And so that's sort of the perspective I come from on safety, at least professionally, in addition to just, the human perspective. You never want to see a worker get hurt, for sure. Let's just start with that. But in terms of the technicalities of it, that principal idea of not wanting folks to get hurt, that I leave to people like you, Darren. I mean, your folks, your people, the culture, et cetera. So that's probably is the most important thing. You can write all the memos and have all the documents and all the manuals and whatever you want. But if the people aren't buying in, and I've heard other in-house counsel say the same thing, if the people don't buy in, forget it. It's just empty words. And that's why, people like you and other safety professionals I've met, Tom Scott comes to mind. Folks are just awesome at getting that human connection and communication. As to my end, though, what can be added to that is making sure that you remember the old adage about OSHA: if it's not written down, it doesn't exist. And I know I alluded to it earlier, but the thing that a lot of employers miss is the training, the safety training that isn't formal. And so if there's anything I would say is get a process where you can memorialize the informal training, because that can be as influential as anything. If you've got some sort of log or some sort of record where that safety manager or the superintendent on site, or I guess maybe even the project manager, is documenting every time they tell a certain person about a certain aspect of safety. And they can be, on the one hand, repeat instructions, which was a warning sign, right? Hey, this person isn't getting it. Or new information showing that, hey, at all times, we're watching how a project evolves, and finding, new safety issues to address. That latter one is awesome, because we all know no two projects are the same. It's what makes construction such an amazing industry. But as a result, it's a huge challenge. And so if you're responding to that challenge by constantly, not only redirecting folks and advising them on new and better ways to do things that are germane to that particular project, but also documenting it, unbelievable. That's just, you just put, as I say, you push over a stack of paper to OSHA and say, yeah, no, we did train our folks, and here it is.
Yeah, it's a good point. Especially with OSHA, from your lens of, council, we had an OSHA inspection on a job in Harrisburg, and they really not hammered us, but they questioned and asked a lot about, where's your documentation for this, and really it was, as Alexander is a controlling contractor, we're construction managers. We don't really have, any self-perform workers. So, we're always seemingly on the hook for controlling contractor scenario, multi-employer,
Yes.
citations. So for us, that's a big thing. It's just that continuous documentation.
That's a whole different issue. And I won't speak to it. I can do a whole presentation on that issue. I think I did once at, was it 2 years ago, Seth, or something like that?
Yeah, I think you did.
But yeah, that's another one, because very often the GC literally gets the exact same citation as the sub. And I'm always like, I don't think it quite works that way, OSHA. So let's dig into it. But you got to know how to dig into it. But that's an issue for the day. But the other thing too, I would say, Darren, is that people talk about AI and technology in construction. There are software, people out there that will make custom make an application for an iPad or a tablet, where you can literally just punch in every time the super reminds somebody something, or what have you, or a safety manager reminds somebody. You can just punch it in, and it goes into the cloud, into a database, and it's just there, and it's just done. You can do drop down menus. You can set it all up as to what's customizable to your needs. And I feel like that's a great resource, because no one's going to carry on a clipboard. No one's going to write stuff down. But if you got a little tablet, you can punch it in, you get it, a piece of cake, and again, but it all depends on someone like you, quite honestly, to get people to buy in and actually pull the thing out and do it,
Right. Good point.
No, and to you as well for raising this. It's an important issue, and hopefully, Ashley, you can find a way to apply to your realm. It's a little outside construction, but certainly, certainly relevant. And obviously, your stuff when it comes to health and safety. So very impressive.
No, I know, just kind of adding into that, when we do have our programs on site, we document everything, right? And again, kind of outside resource for the employer, but we document every employee we see. We document everything we do, every job coaching, every behavior modification, every ergonomic assessment. So employers love us because we so thoroughly document in our system, and are able to give them those numbers so easily whenever they do have an issue, or OSHA's in or is asking about stuff. It's just an extra layer that they're usually able to offer or show that, kind of just took the burden off of them for having to document it all, but we're able to offer that information.
Cool. That sounds awesome.
Great. Any other discussion points that we can touch today?
All right. Well, if not, on behalf of the KCA Safety Committee, thank you for joining us today and sharing your expertise.
My pleasure.
Thank
My
you.
pleasure. Thanks for having me, and great talking with all of you.
Thank you, guys. Thanks,
All right,
John,
see you guys.
Seth.
Great work, John. Thanks, Seth.
Thank you very much.